5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Nvidia to the rescue. The chip giant out with a robust forecast. Jensen Huang saying the firm has plenty of new chips to meet demand. A sigh of relief then. Global stocks rally as Nvidia eases bubble concerns, potentially arresting a week of heavy selling in tech. And the return of the data. Well, one set, the September jobs report. It's the last NFP we'll get before the Fed's December meeting. So that all has an impact on today's trading. And as you can see, we're off our highs, but we are firmly higher for futures, particularly NASDAQ 100 futures. After a week, several sessions at least, of heavy selling in tech. But bear in mind, we're still up 17% year to date on the NASDAQ 100. We're still up almost 13% on the S&P 500. Those Nvidia results, though, definitely helping things. A robust forecast, and that doesn't even include China. Let's take a look at the bond universe. Not much change there, but we know that we're getting an NFP report today. It's pretty out of date, and that's the last official labour market data we're going to get before the December meeting. So after those hawkish minutes yesterday, pretty high bar for the Fed to actually cut in December. Markets are pricing in less than a 30% chance of that actually happening now. Well, let's get to some individual movers. I think we know one or two of them. Over to London and Valerie Teitel. Good morning, Valerie.
That's right, Bonnie. Let's start with a check on the chip makers. Nvidia really leading the gains after that guidance beat and a raise from the main AI chip maker. Nvidia shares higher by over 5% in lifting all of its rivals in the space. AMD up over 4%, Broadcom up nearly 2.5%, and Intel up over 1.25%. Now, Bonnie, it was all down to these comments from Jensen Huang saying their demand for that Blackwell chip, that chip that is used to power AI data centers, is continuing off the charts. We're also seeing a rise when it comes to cloud computing names. The likes of CoreWeave are up over 8%, and Oracle, who signed that $300 billion cloud computing deal with OpenAI, also sharing some of the joy, up 2.7%. Now let's move to a stock in the red. This is Palo Alto, the cybersecurity company. The shares are in the red, down over 4%. Even though they beat when it came to their results, they did announce an acquisition of Chronosphere, paying over $3 billion for it. Maybe there's a bit of doubt in the market this morning on whether that was the right price, with Palo Alto shares down just over 4%. Bonnie?
All right, we'll keep our eye out for all those stocks. That is Valerie Teitel there in London. And in just moments, we're going to be taking a closer look at Nvidia's results with Frank Lee of HSBC. Later in the hour, a drumbeat to the September jobs report with Lerner of Truist. So let's get straight now to the biggest market mover of the day, Nvidia, crushing doubts around AI.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Good morning, Matt. Matt, it was Nvidia's first beat and raise in 6 quarters. Who are the new clients? Why was it able to do that?
Yeah, I mean, I think the client list is a very familiar one. It's the big hyperscalers, so that the Googles, the Metas, the Amazons of this world, all demanding AI accelerators to expand their business. And some of that business is like genuine demand from customers, and some of it is more speculative, that they're kind of building capacity for the kind of next 2 to 3 years as they anticipate more AI spending, particularly by enterprise customers.
Now, gross margins did improve. We've been waiting for this all year. We're at 75% now, Matt. Can they continue to improve, or is that it? Is that the high bar?
I think that's probably the high bar. I mean, it's a pretty good margin to be generating. And actually on the call, they did, flag that there may well be some gross margin pressure on a 1 to 2 year view because input costs are rising, but they're doing everything they can to manage that. So I think somewhere in that kind of 70-75% range is probably where it's going to stay. But yeah, it's a great profitability story.
Yeah, for sure. Jensen was downplaying China, saying, look, at the moment we're talking about $0 in terms of revenue. We're not even thinking about it. But we know the White House has now asked Congress to reject that bill curbing Nvidia exports. So what might that mean for the coming quarters?
Yeah, I think there's a lot of different kind of policy views on this in the US, so it's unclear how easy it will be for the restrictions to be removed. I think the other issue here is that the dynamic in China has changed quite a bit too. Rivals like Huawei, they're still behind by some distance on the technology, but they have closed the gap to a degree. So Chinese businesses can buy decent performing AI accelerators from local providers, and the Chinese government is encouraging them to do so. So I think even if restrictions were lifted on Nvidia, there would potentially be more of a kind of demand issue for them in that market, unless they were fully unrestricted and they could sell unrestricted on the kind of the Blackwells and the Rubens, which I think is unlikely.
Yeah, Matt, okay, thank you so much. Matt Bloxham there on Bloomberg Intelligence. And tomorrow, don't miss our interview with the chairman of Foxconn, Young Liu. The Taiwanese tech giant is a major Nvidia server partner and also well known for assembling Apple iPhones, MacBooks and other hardware, of course. Well, Frank Lee of HSBC says Nvidia's beat and raise, even without China, should help inject confidence back into the AI narrative. He writes this. Nvidia also addressed the AI bubble concerns by highlighting increasing applications, longevity of the GPU lifecycle, and continuously increasing CSP capex. Frank has a $320 price target on Nvidia, and he joins us now. So, Frank, obviously you wouldn't have been too surprised then by this great set of results, this beat and raise with margins up to 75%. How do we all, including Jensen Huang, have so much visibility suddenly into the coming quarters?
Yeah, I mean, I think if you look at Jensen, he's already highlighted that visibility about a month ago at the GTC in Washington. And we've also seen it about a month ago when we upgraded NVIDIA with our bullish target price because of what he's doing in the supply chain. He's given very aggressive numbers to TSMC for next year. And so that shows that he does believe in his orders. And I think the whole narrative shift of a growing market outside of the CSPs is coming through, through the enterprise, through sovereign AI. And I think if you look at CSP percentage of revenues, it's about 50% now, but this is down from where we were probably 12, 18 months ago when the number was much higher. So we do think, that the narrative of this growing TAM seems to be playing out.
So if it's going to grow beyond the hyperscalers to a significant degree, how do you see the mix shift then between hyperscalers, other clients, enterprise, and who would those enterprise clients be? And obviously sovereigns, are there new ones on the horizon?
Yeah, so I think what you're seeing is that the market is, I think the debate in the first half of the year was really, who's fighting for share within these hyperscalers, whether it's going to be NVIDIA with a GPU or it's going to be the ASIC being led by Broadcom. But it seems like what we're seeing now is that actually the market's big enough where everybody's growing. The ASIC players like Broadcom will continue to see growth and share gains within the hyperscalers, but NVIDIA continues to push the envelope with these new players. And we are seeing, a lot of the neo cloud coming through. It's more difficult to quantify given that there isn't like a big number capex, but so far from what we see to supply chain and from NVIDIA's confidence, it does seem to suggest that we are going to see this market continue to grow.
This White House decision that will ultimately very likely lead to the ability by NVIDIA to export to China, will it mean much for the bottom line, given what we just heard from Matt Bloxham, that China and Chinese companies are being encouraged to use Huawei and local domestic companies?
Yeah, I mean, I think the China story it occupies a lot of airtime, but I think if you look at the bottom line, it's not as big. I mean, if you look at the China revenue opportunity at its peak a couple of years ago, it was more than 20% of the market. Now it's down probably to less than 10%. And I think as we can see the evidence from NVIDIA's beat and raise this quarter, and even the $500 billion visibility he's talked about, that doesn't include China. So I think if China comes in, it's an optionality. It's great, but at the same time, I don't think it's as critical for them to continue to drive their growth for next year.
Frank, is the street okay with those margins disimproving a little bit? I mean, it was waiting all year for them to get to 75, mid-70s, let's say. If they come under pressure in the coming quarters, will that hit the stock?
Yeah, I think the reason that people do see some concern on margin is because of the significant increase in a lot of the component pricing, especially around the DRAM, the memory, the HBM memory, that the memory prices have gone up. But I think NVIDIA feels fairly confident about their margin profile. But it also shows you the pricing power that they continue to have is still there, and that's why I think they can navigate through the increasing cost structures that they're going to get hit with.
Frank, you look out as far as full year 2028, and you're looking at a PE there of 28 times, and obviously, a 72% increase from the current price. What gets us there? Is it these new customers, or what else is it?
Yeah, so I think what we feel is that the earnings upside is still not quite recognized by the overall street. Just looking at the data center revenue next year, we have about 350 billion in revenues. That is significantly higher than I think where most of the street was about a month ago. But that number we believe now is much more, I think, being supported by Nvidia's $500 billion visibility. So we do feel very confident with that number, and I think that will continue to drive Nvidia as just the earnings growth momentum. So I think this is a really important quarter, because, as you said earlier, they actually saw a beat and raise for the first time in 6 quarters. So I think this is what the market is excited about.
One of the risks that you do see is weaker than expected data center momentum, which you're not saying is materializing, but it could materialize in the future. What would that look like? And would it be because of electricity needs, or just because suppliers can't, outfit those data centers fast enough?
Yeah, I definitely think that the power is becoming a bigger issue and consideration, especially as Nvidia moves their client base away from the hyperscalers into these sovereign AIs. This is something that I think the overall supply chain is quite aware of. We have about probably 12 months to 18 months before this really becomes a mission critical issue. So we do think that there will be enough time to continue to see how the power infrastructure builds out over the next year to see whether or not that will truly be a bottleneck.
Frank, I wanted to ask you about the older models and the older chips and so on. They're doing pretty well, right? They're lasting maybe much longer than Nvidia thought. Is that going to be a problem for Nvidia down the line?
And so far, it hasn't. I mean, I think they've highlighted on the call that they still had quite a bit of their Hopper revenues. But at the same time, I think they continue to show that there's a lot of demand for their new products. In fact, I think one thing that could be a positive surprise is the Rubin launch next year. This is coming in, I think, so far, we think it could be a much smoother ramp than we saw on Blackwell initially. And we had some yield issues on the supply chain of the NVIDIA rack. We don't think it will be as much of an issue next year now that they've had an experience of doing their own assembly. And I think some of the kinks that we've seen in this year probably will not be as much of an issue next year.
Frank, thank you so much for joining us today. A pleasure to speak with you. That is Frank Lee of HSBC. Now to other top stories trending on the terminal this morning. UBS CEO Sergio Ermotti pushed back speculation that the bank is looking to leave Switzerland, calling it absurd. Ermotti said that the leadership is seeking a compromise on contentious capital rules and that being a Swiss bank, quote, is the best possible outcome. TikTok parent company ByteDance's valuation soaring to $480 billion. A Chinese investment firm bought a stake at far above recent levels, a strong sign of interest in the company. According to sources, the tranche of stock had been priced at roughly $200 million, with a $360 billion valuation for ByteDance. China is considering new measures to support its struggling property market on rising concerns that the sector will threaten to destabilize its financial system. Policymakers are said to be discussing options, including giving new homebuyers mortgage subsidies for the first time. Coming up, President Trump signs a bill to compel the release of all Epstein files and records. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. President Trump pushing the Justice Department to release the Epstein files. He announced that he has signed the bill on Truth Social and added, quote, do not forget the Biden administration did not turn over a single file or page related to Democrat Epstein. Bloomberg's Suzanne Lynch joins us now for more. So, Suzanne, how will his base react to the release of these files? I mean, will there be anything in there that potentially we don't already know about?
Yeah, I mean, this is a significant moment. It is capping a months-long investigations, accusations and controversy over these files. And we saw that about turn by Donald Trump over the weekend, calling for these files to be released. Now, what this means is that Donald Trump, as he announced, has signed this bill instructing the Department of Justice to release the files. They do now have 30 days to do so, But there does seem to be suggestions in the text that there will be room for the Justice Department to decide maybe not to release some information if it is deemed to invade privacy or is related to any ongoing investigation. So let's see how this plays out. As I said, 30 days to go on this. I think Donald Trump has bought himself some time in trying to get over this political crisis, but we're not really going to know how this plays out until these files are released and we see what information is actually released.
Sure, and as you say, any redaction or everything that sows doubt even after the release is only going to rile up his base even more, and some politicians that are obviously calling for transparency here. Elsewhere, we know that Trump is going to host the New York City Mayor-elect Zohran Mamdani at the White House on Friday. Hard to speculate what kind of a conversation they might have, but he certainly wasn't a fan originally before Mamdani became Mayor-elect.
Yes, these are two very different New Yorkers who are going to meet in the White House on Friday. Donald Trump, of course, was very clear in his views about Mamdani, casting him as a communist, casting him as very far left, and ultimately backing Andrew Cuomo's unsuccessful bid for mayor. So it's going to be quite a meeting between these two people, these two New Yorkers who are completely at opposite ends of the ideological spectrum. Now, Donald Trump has threatened to withhold more federal funds from New York. Last year, New York received about $10 billion of federal funds, so about 8% or so of its operating budget for the year. But we do expect a kind of an interesting, if not fiery, exchange between the two men on Friday. And even just speaking there about the Epstein files, Donald Trump has been at pains to try and pin that on Democrats. So we do expect, and one would expect, that the president comes out fighting against Democrats during this meeting with the new New York mayor on Friday.
And then, Suzanne, there's this Genesis mission. It's President Trump rolling this out, a part of an executive order to boost U.S. AI efforts. What could that possibly mean, given that the U.S. seems to already have been trying to do that, and particularly now giving Nvidia likely permission through Congress to actually export to China again?
Yeah, it's interesting. I think the element to watch here is what comes at a federal level in terms of AI regulation. Donald Trump has criticised what he sees as bad decisions, basically, by US states on AI regulation, and he's trying to bump up federal powers over this. So one possibility is that something on this, some kind of language, could sneak into a defence bill. For example, we don't know as of yet how that would manifest itself, but this is definitely the line that Donald Trump is pushing. He believes there should be more federal power over AI regulation. He's warning that the US may fall behind if it doesn't take the stronger federal stance in terms of AI. Of course, this is not just a conversation that's happening in the US. As Donald Trump himself, he spoke about China and the fact that the US may lose ground to China on this if it does not bulk up and toughen up and take the lead on AI regulation at a federal level. But of course, this conversation also happening in places like Europe, in the EU, in the UK, as all these different centres of power try to get ahead in the next stage of AI development.
Yep, definitely a sovereign race. Suzanne, thank you so much for joining us today. That is Suzanne Lynch. Let's take a look at markets now. A big day ahead of us after we got those Nvidia earnings. Don't forget we get Walmart as well before the open. Right now, a very positive tone with S&P futures pointing to gains of more than 1%. Same for the Nasdaq, more in fact. Not too much movement there for the Bloomberg dollar index, but the yen is firmly above 157. That story continuing, a weaker yen. We have a little bit stronger for sterling right now. It's trading at 130.84 as we march ever closer to that Rachel Reeves budget. And the 10-year yield, as you can see, at 413.67. Coming up, Larry Summers stepping aside from teaching at Harvard while it investigates his Epstein ties. That and what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times leading with former Harvard president Larry Summers stepping back from his teaching duties effective immediately. The university is investigating his ties to Jeffrey Epstein. Mr. Summers has also resigned from the board of OpenAI. Now, the Times notes Mr. Summers will keep his tenured status at Harvard and is only on leave from his position at the Harvard Kennedy School. Next up, the Washington Post reporting the administration is renewing efforts to end the war in Ukraine. Special Envoy Steve Witkoff is pushing a revised peace plan that contains provisions opposed by Kyiv, including a significant loss of territory and strict limits on Ukraine's military. People familiar with the matter say top U.S. military officials are on an unusual diplomatic assignment in Kyiv. This after a secretive meeting between Witkoff and top advisors to Ukraine's president in Miami this past weekend. And finally, on the Wall Street Journal front page, a web page for the Centers for Disease Control and Prevention now says vaccines may cause autism. The new text, which was posted yesterday, notes HSS has launched a comprehensive assessment to probe the causes of autism. It's a reversal for Health Secretary Robert F. Kennedy Jr., who had assured senators during his confirmation process that the CDC would not remove statements that say vaccines do not cause autism. Coming up, we'll look ahead to the September jobs data next with Keith Lerner of Truist. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Nvidia to the rescue. The chip giant out with a robust forecast. Jensen Huang saying the firm has plenty of new chips to meet demand. A sigh of relief. Global stocks rally as Nvidia eases bubble concerns, potentially arresting a week of heavy selling. And the return of the data. Well, one set anyway, the September jobs report. The last NFP, in fact, that we'll get before the Fed's December meeting. So let's take a look at how those markets are shaping up for this session. We're off our highs, but as you can see, futures pointed markedly higher, particularly NASDAQ 100 futures. That index, of course, still up 17% year to date. Nvidia is up 5% in the pre-market, and that's really going to help things today. We also, in bonds, are considering Fed moves and potential, Fed hawkishness after yesterday's FOMC minutes. We're not seeing any real change, but we do have the idea of a Fed cut now getting further and further out the horizon, less than a 30% chance being priced in right now. Bitcoin has come back. It was above 92,000 earlier this morning, but again, hard to know what happens with that particular coin. Let's get to some individual stocks to watch now. We have Nvidia and lots more with Valerie Teitel. Valerie.
Good morning, Bonnie. Yes, let's start with a check on the chip makers, including Nvidia. After that guidance beat and a raise yesterday after the bell, Nvidia shares up just shy of 5%, but lifting all chip makers that are involved in the AI chip making space. AMD up 4%, Broadcom up 2.7%, and Intel also in the green, up 1.7%. It was all about this rosy outlook for the demand for those Blackwell chips, with the CEO telling Bloomberg that demand for Blackwells is off the charts, lifting all chip makers this morning. Let's also have a check in on the cloud players, because we're seeing some decent moves there as well. CoreWeave markedly higher this morning, up by 8% in the pre-market. We're also seeing shares of Oracle up 2.5%. Remember, these are two of the big cloud computing names who have signed massive deals with the likes of OpenAI in the last few months. Lastly, let's look at a tech stock that is not in the green, and that is Palo Alto. This is the cybersecurity software firm. Shares are lower, down 4.5%. Even though they did come out with some pretty decent results, they did acquire or at least announce an acquisition of a company called Chronosphere in order to make its foray more into the AI-enabled cybersecurity realm. Perhaps the market is telling the shares at the moment that they might have paid too much for that, with the deal around $3.3 billion. Bonnie?
Whole narrative still all about AI. Valerie, thank you so much. Valerie Teitel there. Well, we're less than 3 hours away from the release of the delayed September payrolls report. Here to take us through what we might see is Stuart Poll of Bloomberg Economics. So, Stuart, what do we know already about what we're going to see today?
Well, when we look at a lot of the bottoms-up data, when we look at private payrolls reports, it looks as though this is actually going to be a pretty hot report. Right now, the consensus is calling for about 50,000 jobs added during the month of September. But when we sharpen our pencils, it looks like it's going to be closer to 100,000 jobs added. That's about 3 times the pace of hiring needed to hold the unemployment rate steady at 4.3%. But I don't think that we're fully out of the woods yet when it comes to cooling of the labor market. We still have yet to see all the federal workers who took the Doge buyout rolling off federal payrolls. After the Trump administration took office, those workers had about 9 months before they would roll off and take that early buyout. We should see some of those payrolls declining, federal payrolls declining, when we get into October. But of course, we're never going to get that October report.
Exactly. It's just not going to come out because I guess the survey wasn't able to be done. The Fed knows this information, right, in the background. Why then would it feel comfortable not cutting in December?
Well, it looks like there's a lot of attention being given to trying to communicate that the Fed is still committed to the 2% inflation target. When we looked at the FOMC minutes, seeing that many FOMC members as early as October were deciding that a December rate cut was not appropriate, seeing it that early really shows that this push that we've seen, this hawkish rhetoric that we've seen, has been a deliberate move to strip out pricing from December. And I think that if we were to see 100,000 jobs added during the month of September, it could even suggest that the terminal rate this cutting cycle is not actually close to 3%. It could be closer to 3.5%. We could get fewer cuts in 2026 than are currently being priced in. So when we see this jobs report in 3 hours or so, I don't think that it's really going to be December SOFR futures that are trading. It's going to be something like 2 years trading. Right now, it's pricing. Right now, the 2-year rate is at 3.6%. I would not be surprised if we had 100,000 jobs, that moving up to 370.
Wow, that would be a big move. It's an interesting experiment, isn't it, Stuart? Because this is the first time that I can recall where the Fed is genuinely on its own. I mean, sure, you could say the market is pushing it, but the market doesn't have information either. So it looks like the Fed is not, you could never say that the Fed was actually being pushed by the market to do something or not do something at this next meeting.
Yeah, right now everybody is looking at the same broad swath of alternative data sets. What we find when we created our alternative labor market index, a comprehensive index focusing on a few dozen alternative labor market indicators, we find that right now the labor market is about 1 standard deviation weaker than it has been historically, but it's actually been improving just gradually over the last couple months during the government shutdown. So while everybody is focused on how the Fed is flying blind, we actually think when we look at all of the alternative data that the Fed is looking at also, they're thinking maybe we're through the worst of it. Again, I think that October would be a pretty bad print, but since we're not going to get it, and since we're going to get the November labor survey, the November jobs report after the December meeting, I think right now everybody is comfortable just saying the alternative data is pointing toward a gradual improvement, very modest gradual improvement, and so the Fed should stay nimble and stay on hold for the time being.
Stuart, thank you so much. That data out again in just less than 3 hours. That is Stuart Poll of Bloomberg Economics. And joining us now for more on all of this is Keith Lerner, CIO and Chief Market Strategist at Truist. Keith, what do you make of what Stuart said there? Are you at all concerned about a labour market weakening, this feeding through to the consumer and so on? Or, is it okay to not panic for now?
Yeah, well, great to be with you. I thought that was a really good analysis of where we are. So, the big picture, if I step back, I mean, this market, the S&P 500, peaked back on the day that Powell spoke and pushed back against the overall market. So I think today is important. There's two key drivers of this market. One is the AI theme, and the other theme about a month ago was the thought of this kind of rate cutting cycle, and that's been pushed back. I think that's why we've seen some weakness, especially in some of the areas that were more of the frothy areas as well. But I think for the market, we got the AI news overnight or last night from Nvidia. I think that's a positive. I think what the market today is looking for is maybe somewhere like Goldilocks. If it's 100,000, as Stuart mentioned, or hotter than that, I think that the market, can still do fine. I think the tech names will continue to do fine. I think the rotation trade will have more of an issue because the rotation trade likely needs the Fed cutting cycle to commence. So at this point, we're still sticking with tech. We still think we have more of a muddle through, economy. But again, the rate cuts are probably more necessary for the 493 or for the sporting trade that people are hoping for.
So, Keith, one of the things that Stuart said was that there would have been weakness in November if the data had been collected. Does that mean that if we don't get a cut in December, that the Fed might be doing something wrong and indeed, everybody will panic once that labour market weakness really starts to show through if it does?
Well, I think that's the risk is on the labor side. We're more concerned about the labor side than we are on the inflation side, especially even in this employment report. Wage growth should continue to come down. We're seeing housing prices come down. Oil prices are down. So I think the focus should be more on the employment side. But the Fed also has scar tissue of the inflation that happened a few years ago. So I guess all in all, that is the risk to the view. I mean, our view, though, is more likely as we move into next year that we will see a modest uptick in the economy because we will have, at least a little bit more clarity on tariffs. We have this tax bill or some of the incentives really going to hit in the first quarter as well. And we still expect the Fed to moderately cut rates. And I don't know that it matters so much whether it's December or January. It's that the path is still one that moderately reduces lending rates over the next year.
So, Keith, just in the very near term then, are we setting ourselves up for a nice Santa Claus rally?
Yeah, I still think there's upside into year end. I think what happened, as I mentioned, the market kind of peaked back at the end of October. But we also have to realize we're coming off for the S&P 500, one of the strongest 6-month rises that we've seen in history. So we were up more than 35%. The technology sector was up over 70%, semiconductors up over 100%. So, coming into this month, I think what we had is a really elevated bar. We had stretched sentiment, stretched prices, and we've reset that a bit. But I think the first piece of a year-end rally is the Nvidia print. The second piece, I think, is having something kind of like that Goldilocks number in the employment side, and then the market could get back into gear. So again, we're going to see later today whether that happens. But I still think the technology side is where you want to be.
Yeah, today is going to be important because when we saw sentiment turn a week and a half or so ago, or as you say, the October 29th was the peak, it really did turn and several stocks really saw massive sell-offs. Okay, overall, the NASDAQ is still up 17% year to date, but could that sentiment turn happen again several times?
Yeah, well, I mean, and even after a report like yesterday, we see futures up. What we want to see is that more buyers come in. So we move from the kind of the fear of the last couple of weeks to some people trying to be greedy and they don't want to, fear of missing out later on. But it's also interesting, I think, going back to some of the corrections underneath the surface, we've seen actually a lot more damage in some of the frothy areas. There was a meme ETF that just reopened after being closed for several years in October. That meme ETF is down 40% since just opening, in October. So to me, a lot of that some of that froth has been taken out of the market. Are we at extreme negative sentiment? No, but at least we have more of a, at least that bar has been reset somewhat lower, so that hopefully stocks can start to reclimb that wall of worry again. But again, I mean, obviously, like I said, this report today will be important for that.
So the little bit of a rotation that we had been seeing, does this Nvidia earnings report now reset that and arrest it, basically?
Yeah, it doesn't mean that has to be either or. Like there's some trends that we're seeing, some improvement in healthcare that likely continues. But I do think ultimately the dominant theme of this bull market still remains AI and tech. And given all these macro headwinds, and we've seen that with some of the retailers this week, I still think the secular growth that we're seeing is still within tech. And coming out of this earnings season, we're looking now at forward earning estimates for the technology sector over the last couple of months is up about 9%. So upward revisions for the tech sector up about 9%. That's about double what we're seeing for the overall S&P 500. So in a time where there's still a lot of macro uncertainty, you're still seeing secular growth. I know there's some concerns around debt financing and some of these other agreements that we've seen recently, but at the end of the day, you at least have more visibility. And I think with Nvidia's earnings, that kind of really highlights that secular growth that's still intact.
Now, Keith, we still have a VIX that's above 20. Look, it's likely to come down further today if stocks rally in particular. But there are a lot of concerns on the horizon beyond what the Fed does, right? We're looking at potentially another shutdown after the end of January as well. Do you give that much consideration?
We do. I mean, but there also, Vonnie, when I think about the markets in general, there's always this what I call carousel of concerns. Like once one concern recedes, another pops up to fill that void. And in some ways that helps helps markets climb the wall of worry. I think what's really most important, the North Star of this bull market has been profits. And yes, the government shutdown could affect things again, but I don't think that's going to have a dramatic impact on where the biggest profits are, which is still the technology side as a whole. So listen, there's a lot of risk. This is not a time to be max bullishness as far as markets, but I still think the bull market deserves the benefit of the doubt. And I would focus more on the profit trends than I would kind of the short-term noise around the government shutdown. And as I mentioned, we still expect a modest uptick as we move into next year because there's some offsets giving, like I said, those tax incentives, a little bit lower Fed rates and so forth.
Keith, I love it. A carousel of concerns. Keith Lerner there of Truist, thank you so much for joining us this morning. Now to other top stories trending on the terminal. TikTok parent company ByteDance's valuation soaring to $480 billion. A Chinese investment firm bought a stake at far above recent levels, a strong sign of interest in the company. According to sources, the tranche of stock had been priced at roughly $200 million, with a $360 billion valuation for ByteDance. A portfolio of private credit loans managed by BlackRock performed so poorly that the money manager waived some management fees, a rarity in the credit world. The portfolio value declined enough to breach an over-collateralization test. BlackRock declined to comment. President Trump has signed a bill ordering the release of files related to Jeffrey Epstein. The bill requires the Justice Department to release all information from its Epstein investigation within 30 days. Trump's signature, a sharp reversal of his previous efforts to block the files' release. Coming up, calming the AI jitters, Nvidia's upbeat forecast has investors breathing a sigh of relief after fears of a bubble bursting. This is Bloomberg.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Nvidia CEO Jensen Huang there speaking exclusively to Bloomberg's Ed Ludlow. Those shares extending gains in pre-market trading as Nvidia's forecast soothes investors' concerns of an AI bubble. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So Tom, there really wasn't a black mark on this earnings report, right? We had a revenue outlook that beat, we had a beat in the quarter, we had margins that beat estimates, in fact, really, but met the estimate for the entire year. And, did you see anything that should cause doubt over Nvidia's future?
Essentially, no. I mean, look, Bonnie, as you know, there are still significant questions when it comes to Nvidia and the future, but certainly they have punted the question of demand further into 2026 on the back of these earnings. Just briefly recapping for you, look, third quarter, to your point, they came in with that beat, $57 billion of revenues. The estimates have been for $55 billion. The margin came in at 73% margin. In the fourth quarter, they expect that margin to increase to 75%. That's the margin forecast for the fourth quarter. And they expect sales to tick up in the fourth quarter to around $65 billion US. One executive, the CFO of the company, also projecting that in the quarters ahead, they're going to get above their previous forecast of $500 billion worth of sales. That's a forecast they made last month. Into the future, they say they expect to top that as well. The question really from Ed Ludlow in that exclusive conversation was around the demand picture for Blackwell and whether or not they can meet the demand. And Jensen Huang was saying, yes, we're sold out when it comes to the data centers, but we still have chips to sell into other customers and clients. The questions that I focused on that still remain unanswered for Nvidia include the Chinese market, where they are forecasting zero sales, and to what extent investors will continue to be patient on that hyperscaler spend on these chips. The expectation from Nvidia is that hyperscaler spend could reach $600 billion next year. Are investors going to remain patient before they get real and material examples of monetization, the customer use of these products at the end of this cycle?
For sure. Now, you mentioned China there, and we know that China may not add so significantly to its bottom line, but it is still appreciably good news that the White House has asked Congress now to reject that bill curbing Nvidia exports because it removes a little bit of the geopolitical uncertainty, at least, right?
Absolutely. And look, Jensen Huang telling Ed Ludlow that he thinks the Chinese market is probably worth about $55 billion for these AI accelerators. He's been very clear that on which side of this debate he sits. You have the national security apparatus, of course, concerned that exposure and Chinese companies getting access to these chips is going to accelerate their progress and lead to risks, particularly when it comes to embedding some of these chips potentially into Chinese military hardware as well. On the other side of that debate, of course, are those, including President Trump's own AISR, saying you need to get that market share for US producers with this kit to ensure that they continue that leadership. The fact that this bill, under White House pressure, is looking less certain, and this bill would have forced the kinds of Nvidia and AMD to prioritize US customers over Chinese clients. The fact that that's been derailed is good news for Jensen Huang and Nvidia, at least for now.
Yeah, absolutely. Tom, thank you so much. That is Bloomberg's Tom McKenzie there. And tomorrow we'll be speaking with the chairman of Foxconn, Young Liu. The Taiwanese tech giant is a major Nvidia server partner and also, of course, well known for assembling Apple iPhones, MacBooks and other hardware. Well, sticking with earnings, retail results continuing with Walmart reporting before the bell. Let's bring in Bloomberg's Maddie Parker for more. Maddie, what are you expecting to hear from Walmart and from, obviously, the conference call?
Yeah, so Walmart, of course, is going to be watched very closely by consumers, by other big retailers, but also by Wall Street. Obviously, the size and the footprint of the brand kind of means it's just basically a barometer for wider US economic health and the strength of the US consumer. We are expecting Walmart to post some quite strong sales growth in the third quarter, and it'll be really interesting to see how they're able to kind of attract consumers who we know are feeling the pinch, who we know are reaching for discounts, and they may well kind of get the edge on some of their other competitors. We've seen other big box retailers like Target, like Home Depot, actually have to cut some of their full year outlooks. It'll be really interesting to see whether Walmart kind of have been able to pick up some of those consumer demand, or whether they'll kind of go down the same path as some of their competitors.
Yeah, I mean, the stock is up more than 11% year to date, but given the rally generally in the S&P 500, I guess you could say that that is maybe just lagging a little bit, although some of the other retailers, you know, Target down 36%, for example. What indication do we see about the strength of the consumer in the run-up to the holiday season?
Yeah, I mean, we've kind of been banging the same drum for a while about kind of consumer confidence being quite low at the moment. That's not just in the US, that is across the board. We know that consumers are being cautious. We know that they're being impacted by very stubbornly high inflation. There's been unemployment, and we know that consumers are kind of feeling the pinch on their finances. They may be reaching for some more discounts, but having said that, there are of course pockets of optimism within retail. We're kind of approaching what we call the golden quarter in retail. So we're talking Thanksgiving, there's Black Friday, there's Christmas. So these are really, really important times for retailers. This is kind of crunch time. You know, if consumers are ever going to spend their money, it's going to be now. So it'll be really, really interesting to see how Walmart do amongst those other retailers as well in the run up to the festive period. Yeah. And yeah, it'll be really interesting to see how that develops.
Just more than an hour to go before those results. Maddie Parker, thank you so much. Well, coming up, we're going to get you set up for your trading day with Fed speak as well, and of course that delayed jobs report. This is Bloomberg. This is Bloomberg Brief. Here, I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, Walmart and Bath & Body Works earnings coming before the bell. Then, of course, the delayed September jobs report. It is out there and it's coming to us at 8:30 a.m. Eastern. And lots more Fed speak throughout the day. We have Hammack, Barr, Cook, Goolsbee and Myron all on deck. In terms of micro movers, Nvidia obviously driving stocks higher across the board, including AI and cloud computing shares. Then we've Palo Alto Networks extending post-earnings declines, even though it beat and had an outlook boost. But it is acquiring Chronosphere. It's a second acquisition this year, this time for more than $3 billion. Regeneron higher as well after the FDA approved EYLEA. Let's take a look at the macro picture as we approach this exciting trading day. This is Bloomberg.